Catch up on the business headlines with the Bite-Sized Business Breakfast.
Where we are this morning talking about the Dubai prime real estate sector. It's set to see the highest growth appreciation of anywhere in the world, according to a new forecast from the guys at Knight Frank. Very pleased to be joined by the head of Middle East Research, Faisal Durrani, speaking to me on the line this morning. Faisal, good morning. It's lovely to speak to you.
Good morning, Brandy. Thanks for having me on the show.
Before we chat about your forecast, let's look at 2022 first, because quite an amazing number there. Prices for high-end real estate rising more than 50%. What's driven that?
Well, Brandy, we're sort of now starting to come out the other side of the COVID-19 pandemic, and we're still hugely benefiting from the UAE's world-leading response to the pandemic. And it isn't just a case of a feel-good factor and seeing increased market confidence. If we look at the various key performance indicators for the economy, we actually see that the numbers have been extremely positive. I mean, if we look at the Purchasing Managers Index for the UAE, it's been in positive and expansionary territory now for 2 years. So businesses feel good about life, they're recruiting, they're growing, and we're seeing, a separate impact in the office market due to rising demand. On top of all of that, we've got the fact that in general, residential prices in Dubai still remain about 22% below their 2014 peak. So albeit we have seen pretty extraordinary growth, it has come from a pretty low base, and it still remains pretty affordable relative to other global cities.
OK, I get the things are going well here, but 50% for prime property?
Yes, that's right. So prime property we define as the neighborhoods of the Palm Jumeirah, Emirates Hills and Jumeirah Bay Island. The average transacted price in these three areas stands at about 3,200 dirhams a square foot, which is whatever that is, $800 or $850 a square foot. And as I say, that is amongst the cheapest prices in the world to buy prime residential property. So we have come from a pretty low base. I mean, if we're talking about other cities like London or New York, it is about 4 times more expensive. And in fact, $1 million in these three areas in Dubai buys you about 1,300 square feet of space, and you'd get about a quarter of that in London or New York.
OK, so who's buying it?
So that's the other fascinating change that we've seen. Unlike previous cycles where we've had a lot of speculative purchasers in the market, this time around, we're actually seeing buyers looking for second homes. And these buyers are coming from new locations that we haven't necessarily seen before. So we've had buyers from Monaco, Switzerland, from the Far East. We've got buyers from Hong Kong and Singapore as well. And these buyers are joining the usual diverse range of nationalities that buy residential property in Dubai, from the UK, India, the GCC, Europe, and North America. So for us, that is a very significant shift. And we know this because if we look at markets like the Palm Jumeirah, we're seeing record pricing being achieved. We've seen price growth of about 50% in the last 12 months for villas, for instance. And people who are purchasing these homes are spending almost the same amount again on some of the villa purchases to refurbish them, because, of course, some of those properties are now coming of age. So what we're finding is that people are very keen to secure that beachfront lifestyle in Dubai, particularly the international ultra-high net worths. And they are spending all that extra money to make sure it is a perfect second home for themselves.
Well, let's look at your forecast next year, 13.5% growth. That's double that of the destination that comes in number 2 for price growth, Miami. In fact, nearly triple it. Why the gap? Is that, again, the base we're coming from, or is there more to it?
It is the gap where we're coming from. But, I mean, we factored other things. For us, supply is very critical. If we zoom right out, we've got about 81,000 units due to be delivered by the end of 2025. And on the face of it, it sounds like the market is pretty well supplied. But when we look at our prime residential neighborhoods, we've only got 8 villas currently due to be completed by 2025. And all of those are on Jumeirah Bay Island or Bulgari Island. And that is where the bulk of demand sits at the moment. And unlike previous cycles, we haven't actually seen developers rushing new villa developments to the market to capture this insatiable international appetite to buy beachfront villas in Dubai. So that is predominantly what is underpinning it.
And this was one of the questions we had this morning. If there are just 8 of these ultra-luxury villas coming onto the market over the next 3 years, why aren't people just building more?
It's a very good question, Brandy. It's a tough one to answer. If we look across Dubai, we see a huge shortage of luxury waterfront homes. What we have seen in the past few weeks is projects like the Deira Islands being rebranded as Dubai Islands, with the promise of having more luxury waterfront homes being built there. But again, before those villa communities are completed and before people can move in, we are still several years out. If we take the Palm Jumeirah as an example, if you had tried to sell homes there to international ultra high net worths about 15 or 20 years ago, it would have been a very tough sell, because the project was largely a construction site for 10, 15, 20 years. However, now that it's completed, it is extremely attractive. And I think that is our big challenge in Dubai, is the lack of these completed waterfront developments.
So how long then can this level of growth continue?
That is the billion dirham question, Brandy. And all I can say to that is we've had a very short history for a freehold residential market in Dubai. And we've analyzed the previous 2 cycles. In the first cycle, we had prices rising for 6 years. In our second cycle, we had prices rising for just over 4 years. In our third cycle, the one we're in at the moment, we've had prices rising for about 2.5 years. So make of that what you will.
Before we let you go, we've got 1 minute left with you, Faisal. How immune is this prime market, this ultra-luxury market, from some of the issues that are bothering the rest of the market? Things like higher interest rates, higher inflation, a stronger dollar. Do these people even need mortgages?
Really good question. Look, we factored all of those things into our forecasts. Clearly, Dubai being a global city, there's always a risk of global economic contagion. The strength of the US dollar is more of a recent factor, and we haven't yet seen it starting to impact appetite from, as you say, the ultra wealthy. Rising interest rates is also not having a massive impact on the surface. Clearly people who are mortgaged are going to see their outgoings increase. We have looked at the proportion of cash buyers in the market, and at the moment it stands at about 80%. And last year it was 40% of purchases were made using cash. Mm-hmm. And it's not that the banks are lending less. We've just got this overwhelming volume of cash buyers, and that's concentrated particularly at the high end of the market. So for now, they do appear to be immune from some of these issues impacting global cities.
Faisal Durrani from Knight Frank, thank you very much for your time this morning.